Hello, everybody. Welcome back to YBI. We got Roman and Zion here. We talk about opinions and strategies to grow your financial self and financial worth. Today, we got somebody great coming through. We got an interview for you all around text time for you. Zion, who we got coming on?
Brittany Okossi, CPA, certified CPA. My personal accountant is coming on to talk to you guys about everything in regarding taxes. In addition to that, we have our giveaway today, so be excited, be looking out for that. But we're going to try to hop right in and have Brittany join the live in just a second.
Also, guys, remember, like, share, comment, subscribe. It's going to be a good one.
We are back. Welcome back. Roman and Zion here, as we said, and we have Brittany Okossi here with us, certified CPA. How are you doing?
I'm doing well. I'm doing very well considering the circumstances.
Yeah, but you out here living the life. You're in New York, Jersey?
New Jersey, yes, close.
Mm-hmm. So you out here on the beach and stuff. You out here.
Yeah, that Jersey Shore.
Okay. That's what's up. Yeah, so a little bit of backstory for Brittany. Brittany and I have known each other probably like 10, 15 years. It's been a while. I'm not going to say that we were in Pampers together, but we've known each other for quite some time, and I've been able to watch Brittany grow and do her thing, turn into a certified CPA. Do a pretty decent job at it because I haven't gotten audited yet, So good job for the past couple of years. But yeah, just tell us a little bit about yourself, how you got started, all that good stuff.
So I went to school at the University of Illinois at Urbana-Champaign, and I got both my bachelor's and my master's from that same school. And literally, like right after I graduated with my master's, I went into studying for the CPA and trying to pass those exams as quick as possible because everyone who was like already a CPA or who was in the workforce was always telling me like, get your CPA done as much as you can before you start working full time, because once you start working full time, it's like, it's not impossible, but it's that much harder. So I took that to heart and I studied, finally passed in 2018, December 2018. So I've been a CPA for a year and a half now. And the reason
you did my taxes for the last 2 years. You said you only been a CPA for.
The first one was a warm up for you.
I did it for the $3.99. Go ahead, sit down somewhere. Anyways, but the reason why I decided to get started with, just getting my CPA and just going into accounting or tax accounting to be exact, is because I really wanted to learn more about taxes because it's something that touches everybody, businesses, individuals, everybody has to do tax returns. So I wanted to, kind of have the upper hand, if you could say. And I'm a very big, do-it-yourselfer. So, I've seen how much it costs to, get your tax returns done. And, whether it was $50 or $500, I was like, I don't want to pay that, period. So I wanted to learn for myself and potentially just help the next person, understand what taxes are. And the reason why I went the CPA route is because the CPA is like the golden ticket for accountants, essentially, because if I didn't have my CPA certification, the job that I'm currently at, I wouldn't be able to get promoted to manager. So I didn't want to, stagnate my career either.
Makes perfect sense. So we know that, you've been following our channel for a little while, and you went on ahead and started your own YouTube channel. So tell us a little bit about that and what you're doing in your personal life.
Yeah, I started the YouTube channel because I'm kind of obsessed with hair. But I just wanted to kind of do something that I enjoy on the side, outside of work. Taxes is cool and all, but at the end of the day, I do still want to do other things with my time. So the other side of it is I kind of always wanted to do a YouTube channel. I was just scared, to say the least. So yeah, I guess I was just my biggest competitor. I don't know. But yeah, I just pushed past and I was like, I'm gonna just do it. And now here we are.
Yeah, then that's what stops a lot of people from doing things they want to do. They be like, well, I'm not for sure how it's going to go until you just take that risk just to get it done.
Exactly.
Yeah. Wait, exactly what that sounds like? Investment in Self. Go back and watch Investment in Self. It was fantastic with Jacob and with JC Scott and with us. It was great. Go ahead and go back. So thank you so much for being here, Brittany. Thanks for explaining a little bit about yourself. So let's hop right in. Roman, go crazy. Lead the way, brother.
So what are some major misconceptions surrounding taxes?
I would say the major one is understanding what a refund is and like what it actually means from an economic standpoint, and you know what it means when you owe on your tax returns, like after you file. A lot of people believe that when you get a refund that's, let's say, over $200, like let's say $5,000, you got a $5,000 refund. A lot of people will feel good about that. In actuality, I don't believe that that's a good thing. It feels good because everybody wants extra money in their pocket, but it's when you look at what actually is going on and the reason why you receive such a big refund, it makes more sense to have not received that refund. So let me break it down a little more. Let's go with the 5,000 example. If you receive a $5,000 refund, that means over the year, you let the government take too much money out of your check. And because you did that, they're like, oh, we took too much money, let's give it back. And that means that you could have had $5,000 divided by 12, which is about 417. You could have $470 per month in your pocket throughout the year. Now, I don't know about you, but for me, I would rather have an extra $400 per month as opposed to receiving some big lump sum once a year. So in my opinion, I don't really like large refunds. If it's higher than $200, I'm like, you let the government hold your money for too long. And on top of that, you let them hold it. You could think of it as like a non-interest bearing account. Like the government held your money. You could have had $5,000 invested in something and could have got at least some type of return from that. And then on the flip side, if you owe money, that technically means that, you know, you didn't give enough money to the government and now you got to pay some of that back. And in that case, it's like, okay, but at least you got to enjoy more money throughout the year. So if I could choose, I would rather owe nothing, because technically you're not supposed to owe anything. You're not supposed to receive anything after you submit your taxes. You should be at a solid zero. And when you do this thing that the government has released, it's like the link I sent it to Zion. It's like an estimator. So
we went over that yesterday.
Yeah. So that will help you like see, you know, how much your tax liability would be for the whole year, because a lot of people, when they, you know, get a job or whenever they have to fill out a W-4 form, they don't really know what to put down. Like, should I put a 1? Should I put a 0? Like, what should I put? So that's another misconception, just not knowing what to put down there. Or I guess it's not a misconception. That's just something that people probably aren't, they're not privy to. So a lot of the misconception comes from just, you know, not knowing what a refund really is and not knowing how much money to withhold from your check throughout the whole year, and just kind of seeing how that all comes together. So I don't want to get ahead of myself. Go ahead.
So
what's your next
you would
goal?
think that that's the best way to make sure that people are coming out at that zero mark is to use that tax estimator. Would that be what you're kind of saying with that?
Yeah.
Okay.
I agree.
We went over all of that in Tuesday's episode. So go back, take a look at what it is that you need to do, how to get there, how to walk through that whole process. Because just as our CPA friend here has said, you need to make sure that you're coming out at a wash and not getting so much back at the end of the year, making it seem like that's a great thing, when in actuality, that's money that you could be using for other things, money to invest in yourself, money to invest in stocks, to invest in your IRA, whatever.
And for the investment in self on that side, you could have got a degree with that almost. You could have paid for some classes somewhere. You could have started a business. You could have started almost anything with an extra $2 to $5 grand. Most states only cost like $150 to $200 to start an LLC. So that right then and there, you already getting benefits from that. So definitely having that extra money in your pocket every month instead of giving it to the government and not accruing any interest. I love high interest savings accounts. So if I'm not getting no interest, I don't want the account.
Yeah. Hey, that's the way to do it.
Exactly.
Make that money work for you, people. Make your money work for you. That's how people that's how the wealthy are getting more and more wealthy. So moving right along, Brittany, are there any suggestions that you have for our audience on how to make life easier come tax time, especially for you, because we know that some of our viewers are between getting a CPA and not. So when it comes to somebody that actually is getting a CPA, what makes your life easier, and what should we be doing like throughout the year to make sure that we can get you all the information in a nice, concise way?
I would say keep track of like all your returns, because when you file your current year return, usually if you're filing online at least, to verify that you are truly who you are, you tend to have your prior year's adjusted gross income that was filed on your prior year return. And if you don't have that, if you don't have good record of that information, 9 times out of 10, I'll honestly say 10 times out of 10, you're not going to remember that exact number. So having just a good file that has all of your tax returns that you've ever filed is always a good thing. And on top of that, if the IRS does ever come to audit you, they have, I believe, 6 years. So if you don't have a tax return, you might be in more trouble. So, just having good files. And then another thing is, whenever you receive any type of tax information, from, your job, like when you get your W-2s or, a 1099, just various, I would honestly keep all of those as well, which kind of, flows into my first point. But, these different, papers help you complete your return. I want to say also, try to start them as early as possible, but don't necessarily like submit them super fast, because if you make a mistake, you don't want to have to go back and submit an amended return. But
his dog is in the way. Oh my God. Wesley's always in the way. He's our team mascot, so don't mind him. He's doing his thing in the background.
No worries.
Sorry to cut you out.
He's out of the frame now.
Okay, cool. I'm surprised.
And then I also wanted to say, far as, what did you say?
Go crazy. No, go ahead.
Oh, okay. So I was gonna say, as some suggestions as far as like getting your return done, I highly always recommend to people to, if they owe taxes, to set up if they owe a lot of taxes, I'm sorry, that they can't like pay off in a short amount of time or just in one lump sum, I recommend to not run away, from the problem, because a lot of people do that. I literally was talking to somebody and they were like, yes, that I owe X amount of money. I closed the computer and didn't open it back up. And I'm like, no, let's not do that, right? So if you actually call the IRS or you go online and you try to set up a payment arrangement, that you will actually be surprised at how helpful they can actually be. So I highly recommend going that route and just at least trying to figure something out that will work for you financially. And then, to also segue into that, start your tax returns early, so that if you also owe, you will have time to, put some money away, see where you could pull some money, see if you could work some extra hours or whatever you do to, increase your cash flow. It just gives you more time to pay it off, because once your taxes are due, you can file an extension, but an extension only gives you an extension of time to file your return, but not to pay if you owe anything. So those are 2 recommendations that I have.
So on the different forms, tell us exactly what withholdings mean, and then the lower versus the higher numbers, how all that works.
Yeah, so withholding is essentially, when you look at your check, you have both a gross and a net amount. And the reason why you get to that net amount is because the government takes money out of your check before it even gets to you. Every check on the check like clockwork. So that's essentially what withholding is. It's literally just the government taking money from your check before it gets to you. And what was your other question? I'm sorry. I don't want to start rambling.
Lower versus higher numbers, how all that works.
Oh, yes. So when you go into your W-4 form, you can put a number. So if you put like a 0, that means the government's going to take as much, the highest amount of, withdrawal from your checks. And at the end of the year, you're more than likely to get a refund if you go that route. And if you put a 1, then that basically means you're also claiming yourself. So the government won't take as much money out of your check when you claim a 1. So the 1 is usually, depending on what tax bracket you're in, you may owe, you may net 0. It depends. And then there's another part, I can't remember the line right now, but if you looked into that IRS website, that, withholding calculator that Zion and Roman will provide to you guys, if you look into that, there is another part of your W-4 form that you can put an actual number on. And depending on what number you put in also affects how much money the government will take out of your check. And the calculator will calculate all that for you. I don't know how to calculate that off the top of my head, so I'm glad that the IRS finally, released something so accurate. So that's essentially what it is in a nutshell.
So we've been talking a lot the last couple of episodes about 1099 workers, about people that are self-employed, people that are trying to have that side hustle and get those things going. What do you recommend for those people before their taxes and things come? What should they be doing to make sure that they're going to be good come tax
time? They should keep a very close track of, again, what kind of income they make. Is it all ordinary income, or are they going to have some capital income or losses? And they should also keep your receipts, keep very good track of, all your deductions that you plan to take, or all your expenses, I should say. And also keep track of your employees, if you have employees. But yeah, that's my biggest thing. Whenever I do somebody's tax returns, there's just a certain amount of information that I need. And when people keep good records of, their expenses, their incomes, the types of income, and they have all of their information from like prior returns, that is very, very helpful when it comes to, actually doing your return.
So yeah, we've been going through people in like a few episodes back about just keeping track of your income statement, seeing what you have coming in, your expenses and all that. So all those things end up coming to help you at times like this, when you have to literally tell somebody how much you're making and what you did and what you spent on and things like that. Having those things already, doing a financial journal every month, writing all those things, having a spreadsheet, all those things will end up helping you come tax time. So what advice would you give your younger self?
Okay, just ask my question then. Go for it.
That wasn't your question.
Go for it.
Whatever.
Oh, snap.
Feel some type of way.
I do. Yeah, Brittany, what advice you have for your younger self?
I would essentially tell my younger self to not get stuff simply because, I can, or I just want to. I definitely indulged in a lot of that in my younger years. I'm still young, by the way, still young. I would say to truly have patience, to save for what I want, and not starve my needs to, pay for the things that I want at the moment as well. Because that's true discipline. A lot of people will starve their needs, but they'll feed all their wants. And I was definitely a victim to that. So I'd recommend not doing that. Recommend saving more. If I would have stuck to the savings plan that I had back in high school when I first got a job, I probably would have a better car right now. But
all about the car. All about the car.
It was all about the car. No, I'm just kidding. But no, really though, I probably could afford a better car right now. And I probably would have been able to put more money to my college expenses, because the most of my money did go to college. I will say that, from what I saved in high school. And then lastly, I would say, this might be a little drastic, but try to avoid debt at almost all costs. Credit card debts, car loan debts, what's it called? A car note? I think it's called a car note. Look, I don't even know what a car note is. That's just how much I ran from it. But avoid any kinds of debt in those cases, because that's another way how people kind of get bound up and in kind of like a bottleneck. where they feel like, they can never get out of debt, and so they just keep getting into more. I recommend saving for, what you want. I think I said that already, but this is kind of like feeding into the why behind that too. Save for what you want so you can just get it outright, and, have the patience to not run right into it and get it just because you can. It's always better to avoid the debt, buy it in cash instead. It reminds me of uh, Dave Ramsey. I know some people may have some
Dave Ramsey.
reservation, but it
Why are we
reminds
talking about
me
him
of
on this
Dave.
show?
It reminds me of him. He says this nice phrase that I do agree with. He says that cash is king and debt is dumb. So I agree with that in terms of getting a car. If you want a car, save for one. And if you absolutely have to get a car, and you have to, finance it, get a humble financeable car, if that makes sense. Get one where you can pay it off in like a year, or you could at least put a large down payment to it.
Moving from there, what do you use to keep yourself motivated? I know that you were saying something about Dave Ramsey. Here's the thing, people. Dave Ramsey is rich. So there's not much that I can say about him as a wealthy individual. I don't necessarily agree with all of his philosophies. He's a very all or nothing kind of individual. And psychologically, I don't feel like you are going to be your healthiest self if you are trying to do an all or nothing type of regimen. It takes discipline for you to do certain things. So even in your financial self, you have to be disciplined. But I don't think that it is, I can never have fun because I have all these other things. Obviously, pay your bills, pay yourself, invest in other things, grow your savings account. All of those things are very necessary. But then to say, oh yeah, you shouldn't have done. I mean, did I need to spend $20,000 to get this specific car? No, absolutely not. Could I have purchased one outright? Absolutely, I could have. Did I waste some money? I sure did. Does it make me happy? Sure does. So it was worth it for me. It was worth it for me. It's not putting me into a greater amount of debt. I'm paying it off faster than expected. And it makes me happy at the end of the day. It's a investment in self where people are going to be able to see me pulling up in my car and be like, oh, okay, he knows what he's doing. He's doing something. I couldn't roll around in something with rust on the side or something. I was like, I have a clientele that expects me to look a certain way. So that's why I got what I got. Dave Ramsey doesn't necessarily have that same philosophy, which is why I'm not always, 100% in line with what he has to say. But, that's just where I'm at.
I mean, his story's a little bit, he's just, from him just being like, going completely broke and bankruptcy and all that, kind of pushed him into this way of just all debt is bad, never go into debt, pay cash for everything. It's got to a point where he has some good things in there, but I like Dave Ramsey. I like what he talks about. By the same token, I do also believe I like using credit cards. I like using debt as a tool. If I can go to the grocery store and get cash back, if when I do go about, I can get cash. It's not like I'm spending more money than what I actually have. I know I'm gonna pay it off as soon as it comes out, and that's the key there. If you're gonna use debt, use it smart and pay it off immediately. Or like you said, with your car note, you're paying more towards the principal every month. With your mortgage note, you're paying that off quicker. Things like that, instead of just letting bills pile up and you go more and more in debt. You keep taking out more loans. You keep going deeper into it.
Yeah, but I'm like, at the end of the day, I'm like, Dave, holla at your boy real quick. You're telling me to save $300,000 to go purchase my first home. That's what you're telling me. You're telling me to go save $300,000. And I mean, I feel like we're in a different social climate than when a lot of the rich actually got wealthy. When they got their wealth, we have to do things differently than our grandparents did, or even than our parents did. Houses were cheaper. In terms of what they were making more than we are currently making, which is why we have to do more. But now you're like, yeah, stay at your parents' house until you're 48 so you can save $300,000 and, pay for your house in cash. I'm like, bro, I have things that I need to accomplish, the things I need to do. If you can stay at your parents' house, if you have it like that, if, that's one thing. But there are a lot of people that don't have that opportunity. There are people that live in poverty and they need to be able to get themselves out of that environment. Or you're saying, oh yeah, don't get student loan debt because, you know, it's debt. At the same time, if it gets you out of the situation that you're in and it allows you to put yourself into a collegiate setting, invest in yourself, and then from there you'll be able to make more, absolutely make that move. Make that move. That's just my
So let me just
personal.
interject.
Go crazy.
Let me just interject. So I like what you're saying. I do. And you know, I'm with Roman on this one. I like Dave Ramsey, but I also do not agree with everything that he says. Like, you know, right now, you know, I have student loan debt and I have a mortgage. So, you know, I'm gazelle intensing and paying down my student loans, you know, as much as possible. But I'm still going out to eat, you know, with my friends if they're like, oh, we want to go to brunch, you know, and he says, if you got, you know, if you're trying to get out of debt, you shouldn't be doing that. And I'm like, well, you know what, that's how I live. You know what I'm saying? That's because it would take me, I think I'm on a 5-year track. I think it's 4 years now to pay off all my student loans. So you telling me for 4 years I can't go out to eat? Nah, I'm not going to stay true to that. So, and you know, I had to learn that about myself. There were other things that he said where it's like, okay, I could give that up. I could give that up, you know, and, you know, I kind of moved things around in my budget. So I kind of created a hybrid method off of, you know, the advice that he gives to people in like his books and whatnot. So
Yeah, like if you're
getting
like,
back to what you said in particular, though, because I like what you said with the whole, you know, if someone's in poverty and they're trying to get out of poverty and they see school as their way of getting out of poverty, my guess is one, if you're in poverty, you just do not, and you're smart, right? And if you're in poverty and you're smart, you don't understand how much money there is out there in scholarships, grants, et cetera, et cetera. Like I literally have friends who I went to college with who said they were on full ride scholarships. And I'm sitting here like, dang, like, must be nice. Like, I'm happy for them. I'm very happy for them. But I'm saying, like, those people, they really should not be in debt
Right.
for school, at
Absolutely.
least,
and
because there's
even
just way
in,
too much money. Now, if it's someone who's in the middle class, like your girl, um, and you know, you're kind of in that middle ground where, again, your parents make too much money to get government assistance, but not enough to actually pay your way through college. Um, those type of people, more than likely, you may have to go and get into debt, or you can go to community college and, you know, get a job and pay your way through community college and then transfer to a university. And hopefully when you were in community college, you were able to make enough money to save and, you know, give yourself a nice upper hand for the university. And then now, you know, you're coming out with way less debt than, you know, you would have had you went straight into a university. So
and even then, a lot of
I don't know.
people
I
don't
think
even
there's
know.
options.
A lot of people don't even know, like, even if after FAFSA, or even if you do FAFSA, or you have to get a small loan, or even after scholarships and everything, if you do end up being able to get a job or a pay internship while you're in school, you can
Mm-hmm.
start paying back those loans while you're still in school.
Exactly.
And are not accruing interest while you're in school. And this
Mm-hmm.
actually gives you a tax credit once you do end up doing your taxes at that time, because you started paying off some of those loans. You can start doing that instantly. So that's, you know, you only, let's say you got all the scholarship grants, you only owe maybe like $2 to $3 left on your actual tuition that you have to get a loan for. Throughout the school year, you probably can make that $2 to $3 to end up paying that back already. So there are
Exactly.
ways you can end up using a student loan right there. And people just forget about it and like, oh, I have to pay it back until after school. And it's like, well, you could have paid that off 3 years ago instead of maybe using that money to buy a new something. You could have ended up paying off that student loan and not have to worry about it. So
Mm-hmm.
you can use it that way too.
Which is what we're going to end up getting into very, very soon. We have
Yeah,
to start diving
college.
into the whole college, the college situation. But I just want to make it clear that I'm not anti Dave Ramsey. I am anti the mentality that you have to be all or nothing. I don't think that leads to mental health. And like I said, it's not just about, I mean, financial health is obviously what we're going for on this show. But in congruency with that, you have to be healthy mentally. And that comes with a balance. So it's not that I'm anti everything that Dave Ramsey says. Obviously, he's done some things right because he's got a show. He's made millions and millions of dollars. He does his thing. But I just feel like telling people to give up everything is not going to lead them to happiness. They may have, you know, a bunch of money, but they're not necessarily going to be happy because they're like, oh man, I can't spend it on anything that I want because I have to pay this. I can't get this because no, man, like you have to be able to budget and do things correctly. And I think that that's where the biggest thing is for me, is that there has to be a balance. And if you can do that, then you're ultimately going to be successful in any arena that you go into in your life. So,
Yep.
Well then, Miss Okossi, we are going to wrap it up for today. We need to do one more thing, which is this. We need to do a giveaway. For this giveaway, all I will need from you is to give me a number between 1 and 10. That's how many times I will hit this generator and it will generate a name, and that is the person who will be our winner. So whenever you are ready, I will get this going. We will do this, and we'll let you guys know who won.
Okay, I'm gonna go with the number 7 because it's the number of completion.
The number 7. Okay,
I
cool.
like it.
Number 7 it is.
Congratulations to our second giveaway winner. Please use
Second giveaway winner. Oh yes. Oh yes. Sorry, I got excited.
Please use it. Invest in yourself. Buy some groceries. Do whatever you want. It's yours.
Yes, congratulations. And make sure that you're sharing this, because we are trying to give you guys money. Like I don't understand why you guys are. This is free money that we want to give to somebody. It's gonna happen again very soon. So just make sure that you're keeping up with us on these different pages, on the different sites. Go to our website. Go to Brittany's YouTube page. Check her out. Everything hair is on there. So what's the name of it again?
Jamafrican Beauty.
Jamafrican Beauty. Yes, go check that out. That'll be in the description below. Again, we just want to thank Brittany for coming on, taking your time to talk to everybody, educate us about everything in regards to taxes. Super important. Obviously, tax time is now. So now is the time when you need to be doing all of that, or it should be done. I would say it's going to be done. But then come next year, make sure that you're swinging back around, checking out this video. We'll probably do another update refresher to make sure that you guys know exactly what it is that you need to do. But take some of her advice, make some changes to W-4s and things, use the IRS calculator to actually see exactly how much you're going to be owing or getting back, and then change some things so you can be exactly where you want to be come the end of the year. We may be young, we may even be broke, but we are always investing. Thank you guys so much. Thank you, Brittany, and we will see you next time.
Peace.
Thank you.
Hey everybody, thank you for listening to Young Broken Investing. We just want to let you know that these are the opinions of the host, are not meant to be the basis of any security purchases or investments. We're trying to give a little information out there for everybody, and have fun and be safe.